Charles de Gaulle's finance minister, Giscard d'Estaing, in the 60s. He became president too. He said that the U.S. had that exorbitant privilege to print money, indebt itself for nothing, while other countries had to work hard to earn the dollars. But what this did, though, it made America lazy, and I'm not having a go at Americans, but how it made it lazy is that Americans had a credit card that had no limit, and they still have it to some extent, where they could buy anything from anywhere around the world, and these countries would happily finance the credit card debt. Wednesday, August 6, 2025, Maneco 64, home of alternative economics and contrarian views. Well, we're going to look at the dollar today, and in particular, the dollar system that we've been under, the whole world, since the end of World War II. And I think that system is in the process of being destroyed. Yes, destroyed. That's what's happening. And we're going to look at why gold, silver, and the miners are pointing to that, in my opinion. Yes, it's not going to be plain sailing, but I think if you're well positioned, and this, of course, is not financial advice. It's what I think, in my opinion. But if you're well positioned, you could not just you might not just survive this coming, massive storm, humongous storm, but you might even thrive. So we're going to look at that today. But before we do, just a few announcements. Many of you know that we've got a merchandise store now, built by one of the viewers actually in Florida. So it's a real community. And I got a message from someone in New Zealand called Steve, and he said, I have just sent an email to Karen thanking her, but wanted to take this opportunity to give you feedback and thank you as well. I live in New Zealand and I have today received your golf polo shirt and coffee mug, and I am not only very impressed with the product themselves and the speed of delivery, but also the very professional manner in which Karen conducted my transaction. And he said, like you, I play golf up to 3 times a week, but nowhere near your handicap, and can't wait to wear the shirt, which I'm sure will stimulate discussion with my playing partners. So yes, we've got this new merchandise store. There's the Rudy collection. There's all kinds of stuff, mugs, t-shirts, golf shirts. I would also like to give a shout out to Dirty Men Safe, one of our longtime affiliates. With Dirty Men Safe, you can hide, secure, and retrieve your valuables with ease. And from what I've been reading here in the UK, they're really coming after people that have a little bit of savings or wealth. And I think it's more important than ever to protect it. I'm not saying Dirty Men Safe is somewhere where you put all your stuff in, but it's an alternative. So with that, let's go back to the dollar. And I have a playlist called the Bretonwoods System, because that's where it all started, the dollar system. And I'll try to give it to you in a nutshell. So towards the end of World War II, the Allies knew they're going to win, and they're getting prepared for the post-war world. We can discuss a lot of reasons why they did that, but I think we need to stick to what happened here for now. Yes, so they started already looking into this, I think, in 1942. But in 1944, they had the Bretonwoods conference in New Hampshire at the Bretonwoods Hotel. And they devised a system based on the dollar and gold, of course. So how it worked was that the United States, having at the time 2/3 of the official gold reserves in the world, was the only country really who could get things going again after the war. The two wars had really kind of bankrupted Western Europe, and the U.S. got all the gold, right? Most of the gold. So the dollar was fixed at $35 per troy ounce, and the other currencies, they were linked to the dollar. They weren't linked directly to gold, and that's why it wasn't really a gold standard. It was a gold exchange system. It wasn't like in the 19th century. But anyway, so for example, the pound was fixed at a certain rate versus the dollar. Let's say Britain or the UK, if Britain ran a trade surplus, it could at the end of the year or whenever it wanted to take the dollar currency and redeem it for gold at $35 an ounce. And that's how the system worked. And that was applicable to all the other countries. And yes, there were some devaluations against the dollar through the decades, but it was very rare. All the exchange rates were fixed. The foreign exchange market was not as big and volatile as it is today because people still had a bit of sanity. They knew that money had to be a fixed weight of the most marketable commodity, which is still gold, I would say. And by most marketable, I mean that you can go anywhere around the world and exchange it for local goods. People will recognize and they'll accept gold anywhere. So that's why it's not just a currency, but it's also money. So the U.S. had the responsibility to lead the world in this system of sound money. And, well, the Bretonwoods dollar system. The problem that it created, though, and it was a paradox or Triffin's paradox. That was a Belgian economist, I think. He was from Belgium, who said that under this system, all the other countries outside the U.S., they would have to try to earn as much dollars as possible, because that was the only way to trade internationally. So what that would lead to eventually would be huge trade and current account deficits for the U.S. And that's what we've seen. And it has become even more pronounced since 1971, when Nixon really suspended this whole Bretton Woods system. Yes, he suspended it temporarily. He didn't really destroy it, but de facto he did. And what happened after 71, the U.S. delinked the currency, the dollar, from gold. And for a couple of years, they kept trying to have the same system without gold. And the same system meant that the exchange rates they try to fix the exchange rates, keep them fixed. But you can't do that when governments and central banks can create these fiat currencies. Now, they were fiat currencies out of thin air because there's no gold anchor. So the fixed rate system collapsed in 1973, and with that, the trade fluctuations, the deficits, the surpluses on the other side became really pronounced. And then with the creation of the petrodollar, which was kind of informal, an agreement with the U.S. and the Saudis to make sure that the Saudis sold their oil only in dollars. That kept the demand for dollars, because a lot of people are asking, why should we accept dollars if it's backed by nothing? It's not as good as gold anymore. And I remember my father saying that back in the 50s and 60s, that was the term. People used to say the dollar was good as gold because you could, well, not persons or individuals, but any country's treasury could go to the U.S. Treasury and ask for the gold. If they had $35, they could ask for an ounce. Or if they had $35,000, they could ask for 1,000 ounces. So what that led to was even more demand for the dollar, because not every country in the world produces a lot of oil, and Saudi Arabia was the biggest producer of oil. So by selling it in dollars, it made sure that the oil market remained the dollar market, and that's what's been or allowed the U.S. to run this scheme to have this exorbitant privilege, which was a term used by Charles de Gaulle's finance minister, Giscard d'Estaing, in the 60s. He became president too. He said that the U.S. had that exorbitant privilege to print money, indebt itself for nothing, while other countries had to work hard to earn the dollars. But what this did, though, it made America lazy, and I'm not having a go at Americans, but how it made it lazy is that Americans had a credit card that had no limit, and they still have it to some extent, where they could buy anything from anywhere around the world, and these countries would happily finance the credit card debt, i.e. the current account deficits. How would they do that? How do they do that? Well, the dollar receipts that they had from trading, not just with the U.S., but from countries all around the world, were invested in treasuries and U.S. financial assets. And that's why the dollar, that's the dollar system, basically. But now, of course, the current administration is determined really to end this system. They realize that Triffin's paradox has destroyed the U.S. economy. The U.S. has become like a debt junkie. Whether they will succeed in the long term in turning things around is questionable, or hopefully they will. But what I think is going to happen now with all the tariffs is, and all the other trade disputes, is that this dollar system is going to be over, because President Trump wants a much weaker dollar. It doesn't want everyone wanting dollars. So that is a paradox in itself as well. So if the rest of the world becomes less dependent on doing business with the U.S., and why would they do that? Well, because they can get better terms amongst themselves, in particular the growing BRICS bloc. Well, they'll go to that bloc. They'll deal with other countries multilaterally. The multipolar world, I think, is going to decrease the demand for dollars massively. And that's being done by the Trump administration themselves. I'm not sure if they are aware that this is going to happen. Yes, they think that the U.S., and it could very well happen, the U.S. could redevelop its industrial base and start selling to the rest of the world as well, and people would need dollars as well. But that is highly possible. But what's happening now is alienating a lot of countries into doing business with the U.S. It's backfiring. So that's why I think, there's going to be a lot less demand for dollars, a lot less foreigners buying treasuries to basically park their surpluses. If they're not going to be earning surpluses with the U.S., and the U.S. doesn't want to run deficits anymore, then it makes sense that there won't be as much demand for the dollar. And I think that is very serious for people, especially in the U.S., but anywhere around the world, who hold a lot of dollar reserves in the form of cash, T-bills, notes, and bonds. and even other financial assets that are not related to government. So I think what gold and silver are telling us, and especially also the miners, the miners are starting to really catch a bid, is that we're just in the beginning of this process. And I think it's going to be very painful for the general public, especially for those at the bottom end of the economic ladder, the working class, the very poor. And why do I say that? Well, because their currency is going to be worth a lot less. People who depend on the government for their retirement, like with Social Security here in the UK, the state pension, everyone's going to be hurt, because not just the dollar, because this is a dollar system, and all the other fiat currencies around it are satellite to the system. They will become worth less and less. And even people who have done very well and have saved a lot of their savings into paper, into dollars or pounds, bonds, they're going to be wiped out, in my opinion, financially. That's really the way I see it. I think it's really serious. But as I said in the beginning, if you're well positioned, you will probably survive quite nicely through this, and you might even benefit massively. And I'm not saying I want this to happen just because of that. I'm just saying it because it's a fact. It's what happens anytime a system of currency or an empire kind of falls. You have a lot of disruption, but you also have a lot of opportunity. You just have to go back to the 90s when the Soviet Union collapsed. Yes, it was the worst of time for many people in Russia, but the best of time for a few. So, is there a way out of this? Well, when you look at what President Trump has been saying, his administration, his officials in the cabinet, it's all very rosy and positive. And I guess that's the only thing you can say when you're going through a really, an existential, a storm that could destroy everything. And is it any wonder? This is another signal here that non-Western central banks have been loading up on gold like there's no tomorrow since 2022. They've been buying record net amount of gold since the Bretonwoods System was created. They know that this system, the dollar system, is on its last legs. So what I want to do now, before I conclude, is show you some charts of gold, silver, and some comparative charts to show you that if you are prepared for this in terms of having gold and silver and the miners, and again, this is not advice. What I'm trying to do is hold on for dear life, because sometimes the short-term noise makes you concerned. But if you look at the bigger picture, I think we're only in the beginning of this, and it's going to be one for the ages. This massive bull market in the precious metals and hard assets. Of course, the only reason it's going to be one for the ages is because a monetary system is dying, i.e. the dollar system. So I've got here silver versus the S&P. I mean, this is still nowhere close to where it could be. I mean, the outperformance of silver versus the S&P is going to be quite something to behold, in my opinion. Here you've got gold versus the S&P as well. Short-term, well, relatively short-term chart. going back to the beginning of the century, and then a longer term one, so a lot of room there too. And we've got the other one within the gold space, which is the Philadelphia Gold and Silver Index versus the gold price, and that's just starting to take off, but it's nowhere near where it used to be, even in the 90s, when, well, 80s or 90s, when we didn't really have a bull market in gold. So the opportunity is huge. And the miners themselves, of course, we've just seen the GDX making new highs. We're almost back to the high from 2011 when gold was at 1900, and now we are above 3000. So you can see what the potential there is. And then you've got the GDXJ as well. That's nowhere near where we got to in 2011. And you might be asking, and I get a lot of this question, which companies should I buy? Well, I did this back in the early 2000s, mid 2000s, when I wanted to invest in the miners. I just went into a fund that existed at the time called the Tocqueville Precious Metals Fund, and I looked at their holdings and I picked a few companies there. I just went through it. You could do the same thing, or you could just buy the GDXJ ETF or the GDX. But just like I don't like gold and silver ETFs, I don't like ETFs in general. So you might want to look at the prospectus of GDXJ and GDX, or SLIVJ, or SL, which is the silver miners, and pick some companies there. And do your homework, do your due diligence before you get involved. So, yeah, that's it for the day. And with that, I'm going to wish you all a very good day. Take care. Bye.